Joining me now are Michelle Meyer, head of U.S. economics at Bank of America Global Research, and Peter Quigley, president and CEO of staffing company Kelly Services. Thank you both so much for being here. Michelle, if you don't mind, we're going to start things off with you. So a lot of data to unpack here. Unemployment fell slightly, 50 basis points. Huge gains for hospitality, 380,000 jobs. Education had some big gains as well. We'll get to that in a minute. What does this all mean for the markets and maybe for some people, even more importantly, the potential of tapering coming this year?
Well, I think it's just as Steve suggested, this was a real relief for the markets because there was so much focus on what was going to potentially go wrong in the economy, wrong in the data. A lot of, discussion around downside risks. And then this jobs report comes, which was, really everything and more that you can want from a jobs report. A strong overall job creation number, net positive revisions, a low unemployment rate, wages increasing, kind of across the board. So I think that, market participants saw this as, okay, there's more fundamental strength in the economy. We do need to be cognizant of the risks coming in the coming weeks because of the Delta variant. But at least there was a really good foundation before we see that transpire in the data flow.
All right, Peter, turn it over to you. We know you're on the phone right now. Our Kate Rogers, she's done some excellent reporting today on the teacher shortage around the country. A lot of big gains in education. Just to clarify for everybody, there were 240,000 government jobs added last month, the majority believed to be in education. Do you see worker demand remaining strong for teachers? And is there any other area where you see worker demand remaining strong?
Well, we see strength across all of our sectors, Frank, but education in particular, you saw an unusually high number of jobs added in July, which is as a result of schools starting tutoring programs or extending tutoring programs, looking to open their schools earlier to try to remedy the pandemic gap year that we had last year. We're the largest provider of substitute teachers in the United States, and I will tell you that the number of teacher vacancies that we're seeing are really reaching alarming rates because so many teachers bowed out during the pandemic, and the influx of new teachers is not sufficient to fill that demand. So not only are we concerned about schools reopening, but we also want to make sure that every classroom has an instructor in it.
Peter, you talked about a lot of teachers bowing out. I think a lot of people kind of bowed out the economy a bit because of their concerns over COVID. Michelle, turning back over to you. We saw wages go up. We saw hiring go up. With the Delta variant in play here for the economy, the market, just all of our public health concerns, how do you see that influencing what we're going to see forward, especially when it comes to the hospitality hiring and especially in bars and restaurants where the majority of that hiring was happening?
Yeah, well, look, a critical factor for continuing to see healthy job growth is labor supply. And we know that this has been a big challenge for the last several months, that there's this extraordinary demand for workers to satisfy all of the consumer spending and behavioral changes that we have seen following the reopening. But yet people haven't been coming back as quickly as maybe the economy would really need in order to see, that pace of growth for overall consumer spending and job creation, et cetera. So yes, Frank, to your question, absolutely, we need to see a further rise in the labor force. There should be a path for that, especially since we're now seeing stronger wage growth. We are seeing the unemployment insurance benefits expire. Back to the conversation around schools, they are staffing up because they're looking to open in person in September. That should alleviate some of the childcare concerns. So the hope is that more workers come back in, they get incentivized by the wage increases, and that satisfies some of this demand. But you have to admit, it's been happening a little bit more slowly than I think we would have all liked to have seen.
Shepard Smith here. Thanks for watching CNBC on YouTube.